So they asked me to wait. Well, anyway, I will start by introducing the speakers, and I'll start with Zaki, who is a finance professional like most of you, and he worked in the banking sector in Lebanon and in Dubai. He has a passion for cryptocurrency. I don't know, but passion is usually dangerous, Zaki. So he has also a master's degree in cryptocurrency from University of Nicosia, and he are an advisor for whoever wants to invest in cryptocurrency. So he's gonna talk about tokens, and he will be so simple so we all understand what he is talking about. Absolutely. Thank you.
Okay. Okay, I'm gonna try to keep it simple. There's different degrees of knowledge in the room. I feel there are people that are involved in crypto and people that are not. I'm gonna try to do a quick overview and about tokens in general. What are tokens and the different kinds of tokens, and then we're gonna dive a little bit more into something new called security tokens. Okay, basically, let's start with perfect. With a small introduction about why am I standing in front of you and we're having this discussion. My name is Zaki Subra. I'm a finance professional. I've been in finance all my life. Lately, the last job I had, I was heading the financial arm of I was heading the financial investment arm of a Lebanese commercial bank in Dubai. I left my job in the banking sector, although I love the Lebanese banking sector, but I left it to focus on my own things. I'm involved in shared mobility, in marketplaces, retail, and energy efficiency. Digital currencies and blockchains are a passion. It was one of the reasons I actually left the banking sector. I did my master's degree in digital currencies, and I do advise financial institutions and companies that are interested in this field. One of them is Crédit Financier Invest, 180 Digital Assets, and I guess that's why I'm lucky enough to be speaking to you today. The topics that we're going to cover are what are digital tokens, the potential of security ownership tokens, and what are the hurdles that we basically need to overcome in order for them to be properly adopted. Let's start with what are digital tokens. You need to think about digital tokens as units on a blockchain, which is basically a distributed ledger among many people. They're units, and the reason you own them is because you control something which is a key. Imagine that this key allows you to transfer ownership of this token to someone else. I'm trying to simplify it as much as possible. There are several. Any question? By the way, if you have any questions, just hit me with the question at the time. There are different kinds of tokens. We're going to start with the payment tokens, which are cryptocurrencies. The reason why I separated the tokens into this is because I used FINMA, which is the Swiss financial regulator. They provided the different kind of a definition for the different kind of tokens, and it is a good reference to go back to. Cryptocurrencies, which basically the most important one is Bitcoin. In my opinion, it's the only one worth talking about. But I'm gonna just read specifically that because I don't want to make any mistakes. Payment tokens are tokens which are intended to be used now or in the future as a means of payment for acquiring goods and services, or as a means of money or value transfer. You need to keep in mind that those payment tokens, there's nothing in the background. So the issuer of those tokens is not linking them to anything. They are generated, mined by the effort of the miners, which are all working in order to secure this payment network. Okay. Yeah, so basically this is why we say that cryptocurrencies are usually native to the blockchain. So it's not that somebody issued them. The blockchain does. Whenever miners work, they get rewarded for their efforts and for the resources that they are putting in that native currencies. And the reason why miners are important, the reason why this native currency actually is important is, one, to reward the miners, and two, in order to avoid spamming the network. Since there are transaction fees, you can't keep sending payments, very small transactions in order to spam the network, because each transaction costs money. You can't just send everything for free. The second one, which is utility token, in 2017, 2018, it was all the hype utility tokens, because everybody who wanted to do an ICO was saying that my token is a utility token in order to basically avoid the SEC. SEC and most financial regulators said that as long as your tokens are not securities, it's not up to us to basically go after you. So everybody wanted to prove that their own tokens are utility tokens. Utility tokens are tokens that give you access to a network. So let's say a good example might be, let's say Salt, which is a lending platform. And the only way for you to access that platform and start taking loans is by having and owning those tokens, which are Salt tokens. Okay, another reason why these are not considered securities is because a lot of times these are provided, at least in the initial stage, with airdrops. So whoever receives them, airdrops is basically you open a wallet and they send you the tokens to your wallet without you paying for them. And since you're not paying for them, the SEC cannot consider them as a security because there's no initial financial outlay in order for them to be a security. Okay, that's about it. Asset tokens. Asset tokens is the one that we're going to focus on a little bit more today. Asset tokens are tokens on the blockchain which are backed by a physical asset. And there's a lot of talk, and I personally believe that this is going to have a huge impact on blockchain, on the use of blockchain, and on how people raise money, how companies raise money. Security tokens, let's divide them, asset tokens, let's divide them into two things, which are security tokens and ownership tokens. Security tokens provide the owner on a claim of a revenue stream, of profits, of revenue sharing, future bonuses, for example, depending on the performance of the underlying asset. Ownership tokens take that and take it a step further, basically. So whoever owns that token has a claim on the actual ownership of the asset. That asset can be shares, can be bonds, can be art, can be real estate. It can be anything. I'm gonna discuss now what are the advantages of that new technology. But just try to imagine that now the ownership of those physical assets can be put on a blockchain, and the transaction can happen with the ownership of the asset as easily as transacting normal digital currencies. Yes, yes, please.
How dangerous is it when you have a digital crash and you transfer money? When you're having any transaction worldwide at any moment,
Yeah.
okay, in any commercial company or corporate, and you might have a crash, and what would happen versus having physical money? And this,
I'm not sure what do you mean by the crash. You mean
what happens
someone?
when you have a disconnection, but not on your local level, on international level, while applying this way of payment.
Okay. Let's say, so you mean if somebody hacked the
Not
Bitcoin?
maybe
It's not working. The system stopped
the system
working.
stopped working, receiving,
it does.
hacking, like let's talk about hacking.
Yeah, the beauty about blockchain technology in general is that it's binary. The transaction either happened or it didn't happen. And when you do the transaction gets broadcasted to all the nodes that are participating in the network. So from the minute that it's broadcasted, it will be included in the next block, okay? Which confirms that that transaction is immutable, which means that it will go through, okay, disconnection in the middle, as long as you broadcast it in many cases to like at least 4 additional nodes, you're done.
I think there's something that we need to make clear, to clarify. If we're talking about, there are many different terms of consensus. There are different kinds of blockchain consensus mechanism, and the one I'm very familiar with, which is Bitcoin. The system doesn't crash. There's no crash. There's you can't hack Bitcoin. You can hack a wallet and steal this Bitcoin, but the system it's a distributed ledger, which is a copy of which is available everywhere, and even lately, I think on a satellite somewhere, right? So there is no way that there's no such thing as a system crash. There are kinds of attacks. There are certain kinds of attacks that can happen on the network, but Bitcoin specifically has survived so many of those attacks. And this is, when we talk about crypto, we're talking about something else, but when we talk about cryptocurrency, which are the payment tokens, I personally believe in Bitcoin. I believe that it's a currency that has lived through time, and it has been attacked, and it's still there. We're gonna have a debate about the price where it is now, but it's fine. I mean, the concept of Bitcoin didn't change, and I will address your question if you want on a side chat, and so that just we can continue, but we can discuss it later. Okay, the potential. Okay, these four advantages are major, and their ability to change how assets are owned is, I believe, it's revolutionary, and I believe it is going to come sooner or later. STOs are going to be the way assets are owned everywhere. We're going to start with fractional ownership. Let's say now you have a Rembrandt, and a Rembrandt is a Rembrandt, and it is going to be owned by a person or two people or somebody. Or the way the ability of dividing tokens into so many fractions. I mean, Bitcoin is divided by 100 million fractions. So imagine how we are able to divide the fractional ownership so that it becomes affordable to whoever to actually own part of that asset. The same thing applies for real estate. I'm not sure which. Okay, but
I know, I mean, now we're going into very hectic procedures to crowdfund or to have one asset owned by Bitcoin. It's headache.
that's the solution. And it's not about only ownership. Remember that it's also about trading it. So now it takes us to the second advantage, which is global reach. Sooner or later, blockchains are not related to a country. Public blockchains are secured by the different miners all over the place, and they are not relying on an enforcer saying that this is owned by this person because I said so. So it's not a ledger which is owned by one authority. It's the blockchain, and we're going to discuss later that this is something that has advantages and it has disadvantages. We'll take a look at the disadvantage later on. Tfaddal.
Is it possible in the future, instead of
How am I doing on time?
No, not far.
So I'll step it up.
is it possible in the future, instead of companies issuing stocks, they start issuing coins?
Yes, it is. This
Yeah.
is the whole thing, exactly.
Yeah, we will
Tokens,
no more
coins.
have stocks.
No, it will be stocks which are represented on the blockchain by tokens. Okay, so for example, each 20 tokens give you ownership of a stock. For example, the ratio can be anything we want. Yeah. Okay, continuous trading. Unlike markets today, blockchain cryptocurrency trading happens 24 hours. So, تفضل.
You are trading ownership in إنه تنقول he is trading ownership in commodity or in 1 kilogram of gold with a Bitcoin with a Bitcoin.
With the token. It might be on the Bitcoin network blockchain, but it might not.
But there will always يعني ما كتير فهمت سؤاله بس ماشي.
هو عم بيقول إنه they will no longer issue shares. They will start issuing.
But the underlying asset is a share.
صح.
And you are exchanging it with this new currency which is called.
You're not exchanging the share. You're exchanging the ownership of that token. Or the issuer is telling you.
So every token has an underlying asset which is different than the other. يعني a Bitcoin for real estate is not the same Bitcoin for gold, for commodities,
yes.
or whatever.
Not Bitcoin. Each token will have a different asset. So let's say you have it might be gold.
May I say
Yes.
a word? Excuse me. But you open the floor when you still have like 10 minutes. So
I'm gonna
you
speed up
have
with-
to, you
Okay,
finish.
I'll
We keep
speed
the
up and then,
questions till.
But remember your questions, please. Okay, so continuous trading, we covered that, and then institutional demand. Institutions are interested in this technology and they are curious about it and they want to take advantage of it. But unfortunately, the fact that, for example, ICOs now, the lack of regulation is a hurdle for institutions to get involved. They want the security of a regulator coming and checking and making sure the investment is in line with their guidelines. And when we say that, okay, our token is a security and it's under the regulatory requirement of the regulator, it will give assurances to institutional players to come into the market and start investing. Okay. Did we jump something? Yeah, liquidity. Okay, next. Sorry. Okay, compliance. Compliance, KYC, AML is something extremely important. And the advantages of security tokens is that we can, and smart contracts in general, is that we can input KYC requirements and AML requirements in the smart contract itself. For example, we can instruct that wallet, that contract, not to send money unless the address that we are sending to, for example, is verified. Directly, there is no need anymore for somebody to come and oversee that. The smart contract does the KYC as long as we set it up correctly. The smart contract does the KYC by itself. Okay, sorry, I'm going to speed a little bit. Efficiency and transparency. The efficiency, I'm going to focus on something. a few days ago, about $250 million were sent from one of the Bitcoin wallets, and that transaction cost $38, $40, $43. Well, at the time it was, I think, 38. Now it's 43. You cannot actually make such a transfer in anything with so little transaction fees. I send every month my car loan from one bank to the other, and I found out 2 months ago that I pay $35 on every car loan I actually transfer every month. So imagine the guy just sent $250 million for this almost same amount. It reduces the paperwork, easier audit trails, and less lawyer involvement. Yeah, we will. Okay, the main hurdle. So it's not all roses and a beautiful story. There are some major hurdles that we need to focus on and try to overcome. The first one is a physical virtual association. So how do you identify the physical asset and make sure that each token represents that physical asset? The assets can be tangible, which makes life easier. So every token is an ounce of gold, for example. So any ounce of gold is the same. But once these assets start becoming not fungible, and you cannot replace one by the other, then there's a little bit of challenge. There's talk about DNA for different plants. There's a lot of different theories that are coming on how to be able to associate them correctly, the assets and the tokens, but this is something which is still under studying. Okay, another one here is basically the liquidity of the issuer at the time of redemption. So a current problem now is that the issuer is the one that is saying one token is 1 ounce of gold. The problem is going to be the day you're going to say, okay, I'm going to take my token and I want that ounce of gold. You will have to come back and trust the issuer because that's what you're relying on, unfortunately, now. Because the issuer is the one that is telling you that this is represented by that. And this takes us to the last major hurdle, which is enforcement. Now, in case of discrepancy, let's say shares, okay, the example that was given earlier. Let's say I own a share in Apple, and it was represented by a token, and I sold that token to Baron, and then Baron went and said, okay, Apple, give me the share. Now, Apple has a problem because my name is on the actual company register, which says that the share is owned by me, but I have sold that token to Baron. And at the end of the day, unless the enforcer gets on board, which is the government or the judiciary or the police officer who's going to come and put a gun on my head and tell me, give me the share to give it to Baron, unless the enforcer is on board, everything is still pending. So this is why we need to update our regulatory requirements, our laws, basically, to be able to reflect that enforcement on Heda. Okay, I hope you enjoyed it. Sorry if it went a bit faster. Thanks.
Yeah. Thanks, Zaki. So, yeah. No, please, let us put things in order. They will do the presentation, and we will keep the answers till the end of the session. It's better. Yeah. So, Abed, you are the founder of CryptoFi. بالقلب حلوين الشباب. أنا الchair.
Based on the questions and based on the intros that you got from the audience,
Yep.
I'm going to change the presentation in a bit.
Okay.
So after my colleague finishes, hopefully we'll be able to address most of them.
Okay. So, Ali, he is a chief technology officer of Raqmiya and an ex-solution architect for lawful interception. You see, he spoke of trust, and now we are with lawful interception, so for several companies. And, well, I like to bet or to bet. Yeah, but I will tell you something about this trade and investing in cryptocurrency. There is a principle here that should make you think. There is a principle according to what you pay attention not to invest what you are not accepting to lose. Don't, no, it's not afford. You have to be, I mean, when you want to invest, to buy whatever cryptocurrency you want, pay attention that in your head, you have to be prepared that you are going to lose this sum. If you are ready to do it, go ahead for it.
Light, okay. Yes, you have to be ready. This is a principle.
This is a principle. I didn't invent it. It's like kind of gambling. Yeah, exactly. Don't play unless you are prepared to lose.
I think you should talk to him. He needs 125 satoshis for each click. He's charging us per click, so I think give him the most, it's better to do. Yeah. Well, honestly, this presentation is the worst presentation I have ever prepared. Honestly, no. Technically, honestly, it's like it's talking about the securities and the threats and risks in the Bitcoin and the cryptocurrencies. Honestly, so it keeps like I felt like as if I'm kicking everyone out from the cryptocurrency space. That's why, like, I felt that it's the worst. I felt like it is the worst presentation I've ever prepared, and I think if Mr. Satoshi saw this presentation, he will kill me definitely. To bet or not to bet. BIT, B-I-T. Who am I? I'm Ali Askar, the Chief Technology Officer of Raqmiya. I'm gonna fast forward on this one. The co-founder of the co-founder of Zero and One, which is currently an Amazon Web Services partner in the Middle East. Solution architect for the several lawful interception products and solutions, cybersecurity lawful interception. And what we mean by lawful interception are the guys or the products, or let's call them the solutions that catches your WhatsApp messages or your WhatsApp calls or the whatever is happening on the internet or on your cellular mobile phones. So our outline. We're gonna talk about the threat intelligence. Threat intelligence, like somehow how the security or the intelligence guys think about something, or how they analyze something, or how they analyze the threats or the risks in the cryptocurrency. Just how similar to the NSA or CIA. Just think yourself James Bond. Consider yourself James Bond for now. We're gonna talk about the threats in cryptocurrencies and the cryptocurrencies in crime. And finally, we're going to talk about the economical factor and the political factor of cryptocurrencies and risks in cryptocurrencies. Threat intelligence. So I think like you need 1,000 Satoshi from me right now. What is it? The application of intelligence analysis to problems of cybersecurity, actually, in cryptocurrencies, are the threat actions we take. The threat actors, sorry. Attacks across times targets with the commonalities. For example, if we can see an attack on this network, for example, 3 days later we saw an attack on the other network, and there is something similar in here. For example, let me take you back to the examples of the WannaCry ransomware. We saw that the WannaCry ransomware attacked the entire globe eventually, but we didn't expect there's something called WannaMine. WannaMine is the same as the ransomware, but technically they're not asking for ransomware. They're using your computer resources to mine Bitcoins or to mine Monero, actually. So there's a similarity in between. Tools, techniques, and procedures. So believe me, those 3 slides are the worst slides in this presentation. Okay, challenges. Well, in the threat intelligence, the challenges are identifying the novel or the unknown, as if you're looking in somewhere in the Dead Sea for a needle in the space. You're looking for a satellite in the space. There's a huge number. There's a dealing with you're dealing with uncertainty, as well as there is a huge number of data, but limited in collection means. What we're talking about collection means how can I collect data? From where I can collect data? We already know that there are the Bitcoin transactions, the transactions, the nodes, and so on. But where are the rest? For intelligence analysis, for example, the human intelligence or the human, as we call it, we all know the military intelligence, how they act. They have like 30,000 persons on ground. They are collecting data for them. They're using ISPs and so on. But in the cryptocurrencies, how are we collecting data? It's somehow impossible. We're using the bot. We're using the traces or the packets or whatever we can find to collect the data or to analyze the data. Minus 100 Satoshi. Integrating with existing business processes should correspond to increasing maturity. For example, if we were doing an intelligence analysis on the Bitcoin network and suddenly someone just decided that we should fork the Bitcoin network and create an advanced form of this Bitcoin network. Okay, my entire threat analysis procedure was simply deleted and start over. We lost a couple of months building another strategy. The next. Oh, intelligence cycle, we have the data as we said. It's not intelligence until analyzed. Cycle begins with the requirement stage. Production may include revised requirements, finished analytical reports, threat indicators, managerial policy changes. Again, we're talking about the intelligence analysis here just to more like to give you a basic understanding of what we're going to talk about next. Okay. Just think about the intelligence analysis as like the James Bond theory. Production and this, we start by the requirements, sorry, actually. We go for the gathering, we send James Bond on ground to gather some intelligence for us, we do the analysis on it, and finally we do the production or the kill and divide and conquer. The issue with data is that, I think there was a transition in here, but it disappeared. Thank you, PowerPoint. Too many data points. For example, if we check the Bitcoin data or the Bitcoin analysis or the Bitcoin, for example, the Bitcoin transaction analysis or the Bitcoin wallet addresses, we'll find like around 1 terabyte. Analyze the 1 terabyte. The funny thing about collecting data from endpoints or from forums or from groups or whatever, something publicly available, open source intelligence, or as we call it, OSINT, check my Chrome bookmarks menu. 1,000 links bookmarked, just to collect some data. Cryptocurrency. What makes a cryptocurrency? Actually, this question is like the novel question, or what makes a cryptocurrency? Actually, the cryptocurrency is made up of goods and services, drugs and so on, the mining, the protocols, and the exchanges, and eventually the wallets. But at the end of the day, centrally to any cryptocurrency, there is the ledger, which is a distributed record of all transactions. New entities should be added using the miners technique or using the mining process, sorry. Mining Bitcoin. As we can see, the ASICs, the GPUs and the CPUs and the pools. What is actually being used right now for the Bitcoin actually is the ASIC. That's way more faster than they can do. Can mine a lot of blocks each per hour. Okay, if we're going back to the cryptocurrency, slide. If we're going back to the cryptocurrency mining attacks or the mining crimes, we can see if you saw the news of the Russian scientist, the Russian nuclear scientist who was using the nuclear power plant computers to mine bitcoins. He exposed the entire nuclear power plant to the internet just to mine some bitcoins.
Sorry, you mean cryptojacking, right?
No, this one was a Russian scientist in a mining, actually in a nuclear factory.
Yes, but they're using it for cryptojacking.
No, he was mining those bitcoins.
Oh.
He was using the supercomputers to mine the bitcoins.
Excuse my ignorance, but what does really mining mean?
We'll get to that without.
Yeah.
But why is this illegal? Using the power plant to take the...
You're exposing a 250 megawatt of fully destructive power to mine bitcoins. You're exposing your
It's
government.
profitable though.
It's profitable, yeah.
Unless she was thrown in jail.
Yeah, next.
في صورة اختفت. Thank you, PowerPoint. I'm using Linux, so when I converted everything from Linux to Windows, everything could have disappeared.
Venezuela actually.
The Venezuela
only
scene-
difference- The only thing that's missing from this picture is the black background. That's how visible it is. Okay, so that's it. Message delivered. Think
The
of
Venezuela scene, like regarding the crimes, there has been some analysis on the Bitcoin nodes and the Bitcoin transactions happening from Venezuela to the outer world. On average, there is $30 million being transferred daily out of Venezuela. And you're telling me sanctions can destroy a country? No one has access to nodes in Iran, so we can't know what's happening in there. But in Venezuela, we can easily calculate it to 30 millions daily. Mainly Lebanese. Mainly those guys who got stuck in Venezuela. They're having like millions of bolivars, millions of bolivar new, bolivar prime and prime. They changed their currency 3 times this year. So the people who has those, they buy mining hardware. They start mining Bitcoin on a massive scale, and they sell those Bitcoins outside. I'll keep it to Abed. I'll keep it to Abed. It's so simple. It's so simple. Wait, let's hope the Lebanese lira crashes so we can start mining in Lebanon. So we won't pay a lot of liras for the electricity if we have the electricity. Who cares? Honestly, who cares? Technically, even if the banks blocked it, or even the central banks blocked it, or it's illegal, how can you block it? How can you block it? Simply.
Let's talk later.
I'm from the security guys. I'm the security aspect of things. So how can they block it? It's nearly impossible. They tried blocking the gambling sites, but everyone is accessing them. Everyone is using the Lebanese Mastercard, the Lebanese versions of Mastercards to pay for gambling sites. Who cares? Oh, the 70% loss on average. Oh, sorry. Cryptocurrency and crime, my favorite thing. We find, actually this is a snapshot or a snap from the research from University of Sydney. We find approximately 1/4 of Bitcoin users and 1/2 of Bitcoin transactions are associated with illegal activities. Okay, around $72 billion of illegal activity per year involves Bitcoin, which is close to the scale of the US and European markets of illegal drugs. The funny thing is that, like the conspiracy theory, how they consider things, and that $72 billion, the same number, here's a bone for the conspiracy theory types. Business Insider reports Bitcoin has lost $72 billion in value since the beginning of 2018. The same number that was being used for illegal activities is the same number that Bitcoin has lost in value during this year, as if they're saying the illegal guys or the legal criminal guys, criminal type of guys, they're exiting the Bitcoin network. They're exiting the Bitcoin.
They're justifying it. They're justifying it anyway.
They're justifying it in some way.
Do you buy this justification?
Honestly, no. Because like most criminals aren't using Bitcoin right now. Honestly. We'll go for the second point. There is a better option, which is Monero. So if you can go for where's the high quality images? If you can go for the dark net or the dark web, where we can see most of the criminals and the drug deals and the blah blah blah, we'll find no one is using Bitcoin anymore. Everyone is using Monero. For one simple reason, Bitcoin is actually, as they say, it's untraceable. So though it's traceable through Bitcoin clustering. Okay, it's an advanced technique used by lawful interception guys to track down who's the real user of this Bitcoin address. So technically, even in the entire dark web or the entire dark forums, we'll see that everyone is talking about Monero. Someone was talking about, notice how the Bitcoin post talks about stealing someone else's coins, where the Monero posts are talking about exploiting someone's machine to make Monero for you, or the crypto jacking. Sometimes like you see your CPU load or your computer just suddenly freezed out of nothing, or it's tough, really tough to open a new tab in Chrome. Why? So you installed, or actually someone installed for you an extension, or you opened a lovely tab that's using your computer or using your CPU to mine some Monero for him. I think I have 2 slides left. Divergence and in which cryptocurrencies are used. Ransomware payments prefers bitcoins, are the WannaCry or as the late 2017 attacks. It's the most popular and easy to cash out using exchanges, using cash, or using local bitcoins or whatever. Cryptojacking, the guys that we were talking about, they prefer to use Monero. It's easy to mine it on a CPU, and it's cost effective on a CPU technically. Privacy features above and beyond Bitcoin, although it's traceable. Can't be directly purchased at most exchanges. Like technically out of 100 exchanges, you'll find 2 or 3 selling Monero directly, without further KYC, further procedures to sell and to buy. Exploit kits, I think I should skip this one, it's too technical. Let me talk. Exploit kits are shifting away from ransomware towards crypto miners. Can be used because they can be used as an evidence unless the police stole the coins. If you remember the empty jocks, the Silk Road, the darknet. Eventually the feds caught the guy and they caught his bitcoins and they linked the Bitcoin address to him and so on. But it turned out that one of the policemen stole some of those bitcoins. So, which is the case we're seeing every day. Like whenever they catch someone who has bitcoins or so on, they will snip some of his bitcoins. Skip this one. Theft. We'll go to the favorite part. As Zaki said, like if we're stealing something, we're not stealing Bitcoin. We're stealing your wallet. We're stealing the exchange or the wallet, the ownership of this Bitcoin or the ownership of this coin. So as we've seen it, phishing attacks are still popular. Like whenever you go for blockchain.in, for example, you'll find a complete replica of blockchain.com wallet. It's being used to steal your password for the blockchain.com and to take over your wallet. So what to do? It's better to enable multi-factor authentication and the SMS and the privacy keys and so on. Attacking the exchanges or stealing or the theft from the exchanges, the major events actually, the empty jocks case, $450 million stolen in Bitcoin. The Bitfinex in 2016, around $72 million stolen in Bitcoin. CoinCheck 2018, 530 million stolen in NEM, using NEM actually, which is Tor proxy wallet addresses. A lot of people say that if you're going for privacy and for your own privacy, use Tor. Okay, someone can deploy a Tor node in here, use a proxy fire inside this Tor node, and redirect all of your traffic into there. Suddenly create something similar to blockchain.com wallet, and he can tackle your password again. ICOs, كبة extortion. ICOs. Oh. The ICOs, the major 2 thefts of the ICOs, both of those, one of this, Plexcoin actually, I was one of the guys who invested in Plexcoin. 50 millions were stolen. The funny thing about, like I was telling Zaki, how many ICOs have you participated in? He said none. Before we started the conference. I had some Ethereums few months ago, and I just want to kick them out. I don't want those anymore. So I started participating in the ICOs. Out of 12 ICOs I participated in, initial coin offerings, 8 of them were stolen. Hmm? 4 out of 5. Technically, there's no company called for what example? You buy something, you get nothing. For example, do you remember the Turkish guy who stole like around 2 million or 3 million? He created an ICO, a cow factory or something, I don't know, a milk factory or something. I can't remember the case. Similar to a Ponzi scheme. Similar. As if like, yeah. As if I'm saying, I'm gonna sell you this microphone. Please pay me 10,000 Lebanese liras. You give me the 10,000 Lebanese liras, bye-bye. I still have the microphone. I don't have anything to sell you, actually. There's a Turkish guy who stole like around 10 million. I don't remember the case. He stole like around $10 million. Suddenly he disappeared out of the entire universe. And 2 months or 3 months later, he posted a picture on Twitter, "Thank you for funding my retirement." Ponzi schemes. BitConnect, my Bitcoin, Cabbage Tech. I want to comment on something. There's one of the ICOs that got stolen is the Ponzi coin. Look, you can tell it's a scam from its name. I wonder who invested $250,000 in this coin. And the price manipulation, I'll keep that to Abid. Currency transfer, follow the money, which is the money laundering thing. You'll find Ripple, Hawala.today, remittance, a lot of them, money laundering, Bitcoin, altcoin to Bitcoin again. Coin tumbling and mixing. You have a lot of stolen Bitcoins, or you have 1,000 Bitcoin used from drug sale or something. You can go for any tumbler or mixer, make them brand new, make them super clean, and that's it. You have clean Bitcoins, go sell them and cash out. Terror funding, Al-Sadaqa collection on Telegram. So funny. They collected like around 1,000 Bitcoin during last year, specifically for ISIS. Sanctions and tax evasion. As I said, I was showing the guys, like I had the proof of funds and so on for millions, if not billions of dollars of people trying to buy Bitcoin in the US or in Europe, at the same time sell them in Hong Kong. We're talking about 100,000 of Bitcoin or 500,000. I finished. Done. Battery slide عندك وهي the end. كب بعيد. Blockchain fever. The blockchain fever, the last part, I think you should forget about this one. There's a funny thing, during December 2017, the company called Long Island Iced Tea changed its name to Long Blockchain Corporation. Suddenly the stock price tripled in price. And the funny thing is that during January 2018, they merged with the Stater Blockchain Limited, another company who changed its name to Blockchain. And they tripled in price again. The last part. Patch your system, enable multi-factor authentications, watch for unusual resource usage, awareness, and finally, cryptocurrency is still money 2.0. Don't worry about everything else. Thank you.
So now we will be with Al. It's good. He is the founder of CryptoFi. He has more than 25 years in information communication technology. And he shifted from technical to consulting tech in general technology. So he's going to talk about clarify some of the issue you have asked about.
Well, not some, actually. Yeah, not only mining. Actually, what I'm going to do, restructuring the whole thing in order for us to address the questions that you have, because I would like you to leave this room, okay, with more knowledge and more informed questions to ask, okay? Because of the backgrounds, the mixed backgrounds and levels. Exactly. So this is why, you see the underlying message. To be great, exactly, we'll go over them. To be great is to be misunderstood. And what we see right now is a total misunderstanding of blockchain by the general public. Okay, first about us. CryptoFi is a team of tech-centric crypto enthusiasts, privacy advocates, security veterans, and open source believers. We believe that everything we do has to be open source because that's the way to spread the knowledge, get more people involved, and teach and grow together. Okay, so this is our way of giving back to the societies that we live in, the environments that we work on. I won't give you any SDKs, not you. Okay. So what is blockchain technology beyond the hype? Okay. It is simply the amalgamation of the full information and communications technology spectrum, number theory from mathematics, and mathematical logic employed for collections of purposes. Some of those collections of purposes are basically services, applications, just like you chop a tree down, you can make it a toothpick, you can make it a table, you can make it a chair. One of those toothpicks was the securities token, for instance, for asset ownership, shares of something. It's just an application. What is really interesting is the underlying technology. So, a bit of history. In 31st October 2008, a white paper was published by Satoshi Nakamoto, the anonymous creator of Bitcoin. He called it peer-to-peer electronic cash system. Okay, and in it he described what he envisioned to be the peer-to-peer electronic cash system. In January, the next year, the Genesis block was mined. For every blockchain, there is a Genesis block, which is the first block that marks the time of the first block. Okay, and in it he embedded what's called the Coinbase base, you know, the base, the foundation. In that Coinbase, he embedded this message, which was basically the Times headline. Okay, Chancellor on brink of second bailout of banks. Okay, so the underlying message of creating Bitcoin is creating a peer-to-peer electronic cash system that is decentralized, peer-to-peer, not controlled by any central body anywhere in the world. On the 9th of January, the first open source Bitcoin client was released on a platform named SourceForge. And through forums, okay, people started getting interest, reading the document, you know, just like you know, you saw that InfoPro has a cryptocurrency talk, okay, so you're interested, curiosity, what does it do, you know, what's it all about? So, no, still, not 10 years later, we're talking 2009, yeah, 10 years later for us, true, okay. On the 12th of January, the first Bitcoin transaction, okay, was initiated. The value of it was 10 BTC, but BTC had no value at the time. And that transaction was done from Satoshi Nakamoto to a developer, okay, who was interested, read the white paper, downloaded the client, installed it, ran it, okay, connected to the network, placed his address on the forum, and he got an airdrop of 10 BTC. In 2010, just, yeah, he sent him. He sent him. Yeah. Parachuting, exactly 100%. Okay. In 2010, okay, famously, by personal arrangement, you know, it was a joke also on some of the forums. I want to buy pizza with BTC. A guy went ahead and ordered 2 Papa John's pizzas, okay, and he paid for them 10,000 BTC. Again, BTC at that time had no monetary value. Okay, it was the concept that attracted all these people to it. Okay. Move forward to 2014, the first precedence of an ICO, which is the Ethereum crowd sale. Okay, now between 2009, since Bitcoin came online, there were many forks and many trials and many other modifications of algorithms and code and. But a major milestone, yes, and crashes. But anyway, the price didn't really move much at that time because it was, you know, adoption wasn't so wide. But anyway, the Ethereum crowd sale. اللي فوق شو هو؟ Satoshi Nakamoto is an anonymous person. He just disappeared. He vanished. Nobody knows who he is. He has some, nobody knows what he made, what nobody knows. He just set up the network, put up the code as open source, and left it. Possible, بتمنى. Okay, so precedence in 2014, a crowd sale for Ethereum. Okay, that less than a year later, okay, it generated around $14 million for them. Less than a year later, the network went online. Okay, and that was the second level of innovation. Why? Because Bitcoin is a distributed, trustless network that allows transactions peer-to-peer, okay, of coins. And those coins are digitally identified, okay, and ownership is transferred without any permissions except from the sender to the receiver, okay?
عندي سؤال شو صار بالبيتكوين؟
Bitcoin is still on.
لا فوق شو صار من 10 ل 14 بالبيتكوين؟
Ongoing people adoption, awareness شغال، العالم عم تشتغل, forking, new projects came up that forked it. Yeah, the project, because it is open source. All cryptocurrency projects and blockchain projects that are not guarded and initiated by one of the big names that are going after all the enterprises around here are open source projects. Open source projects means anybody in the room with the capacity to do anything to enhance, develop, grow, modify, can propose that, and then the open source community of that project will accept it. فهمت علي كيف? You can contribute. Okay? Yes, but there is technical governance, which means that you cannot change things dramatically because there is something else that we'll talk about right now that will. It's not a body. This is the beauty about it. The network has to accept the change. So let's say everybody that's operating that code, if somebody proposes an improvement, okay, 51% of the people that are operating the code as is need to accept that improvement for it to take effect. Other than that, it's ignored. So, trustless, decentralized, controlled by anybody that participates in the network. Today, where are we? Okay. Here. There are more than 2,000 coins and tokens projects issued. Some of them are dead, some of them are alive. Okay, some of them are active, some of them are useless. Okay, some of them are being taken over, like revived. Okay, old projects that somebody else took them over and wants to create something with them. And they're counting. And on the Ethereum network itself, there are more than 150,000 ERC20 tokens, which means that these are token contracts on a network. But consider it this way: each one of us can create on the Ethereum network his own token. So imagine 150 people went ahead and created their own tokens. Also, some of them are worthless, some of them have something to do, some of them, you know, between the ERC20, which is a standard, and the ERC721 could be securities tokens, share tokens, you know, the stuff that we were talking about a bit ago. Okay? Where are we also, not in regards to the tokens, exchanges. There are more than 300 exchanges, active exchanges, that allow people to trade cryptocurrencies and tokens against each other. With very few, with the regulations now, it's becoming more difficult to tie it to fiat, which is the euro, the Australian dollar, you know, the USD, etc. And there's a new emerging, I don't want to call it an animal, but it is a beast, which is the decentralized exchanges. So when regulators started to push in regards to KYC, I don't know your customer, everybody, you know, the transactions need to be cleared and traceable and tracked, etc. Okay, a new beast was created from this ecosystem. This is how dynamic it is, which is decentralized exchanges, which means I can trade with someone, I don't know him, I have my coins, he has his coins, I have coin A, okay, 1,000, and I want to sell them for coin B in return of 2,000 of coin B. Okay, I place my order on the network, he accepts the order, transfer happens, no middleman involved. Okay, yes, yeah, I'm getting there. This is why I was saying decentralized exchanges are still in their infancy, okay, in regards to, you know, the development. They do have liquidity problems, and some of them are doing better than others, but really it's not only best liquidity problems, it's not only liquidity problems, it's also the take all or none, okay, matching of order books, okay, which will be addressed, because how old are they? How old is all this ecosystem? But how many beasts did it create? Okay, so basically, I personally feel that Satoshi Nakamoto opened Pandora's box. Okay, and now it's up to everybody that partakes into this ecosystem to contribute, to create, to innovate. And where are we from a different perspective? In November, Malta declared itself a blockchain island. Estonia, for years now, they had this e-residency system, but they have fully regulated legal framework for you to establish blockchain-related organizations. Okay, and you will be able to do it and run it from anywhere in the world after you issue your e-residency. And that will grant you EU access, which means that it is really regulated there. Okay, the SEC is doing the cowboy style stuff, okay, carrying the sledgehammer and going around.
Excuse me, Abed, but maybe we have to say that blockchain is not cryptocurrency.
No, that's what I'm getting at.
Yes. No,
Okay.
because, you know.
Okay, so two countries, okay, be it whatever the effort, any effort, okay, from those countries, be it Malta, Estonia, Switzerland, okay, any effort is beautiful because all this is new, okay? None of it has a rule. Rules are made by the majority, okay? It's whatever we create and superimpose on it in order for it to serve us. And the major turning point happened just a week ago, 10 days ago. I'm not sure if anybody from the tech industry, they will know that when Amazon started Amazon Web Services, it was a turning point for everything related to application development and web services, applications, mobile apps, platforms, etc. Because if anybody before Amazon Web Services needed to do a proof of work for an application, be it what it is, they would need to invest in infrastructure to set them up. When Amazon Web Services came live, it gave everybody a chance, a sandbox to play with at an extremely low cost to prove their concept. And a week ago, Amazon added AWS blockchain, okay, which means that you will be able to, just like if you want to build an ERP system, an insurance application, a chat app, if you want to do something on the blockchain, you don't have to be an expert and you don't have to invest a lot of money in infrastructure and testing. All you have to do is just go, charge your account on Amazon, AWS, and build your building blocks, do your proof of concept. Okay? A picture is worth here 125 million words. Not million, billion. This is where Bitcoin started, okay, and where it is right now. The not Bitcoin, the cryptocurrency ecosystem capitalization hit more than $750 billion in capitalization, and now it's at 125. Who cares? You have to believe in the principle. Okay, so this is the magic recipe. Okay, this is the magic recipe. Everybody talks about tokens, cryptocurrencies, blockchains, okay? It's insignificant. What you need to understand is the ethos of it all. Plain and simple. It's a ledger. In some cases, it's centralized. Okay, what's a ledger? A ledger, for anybody from the banking industry, it's a database. Okay, it's a database. So the ledger is a database. It's in the cryptocurrency and blockchain technology, it's an immutable database that in the best cases and the optimum cases that we believe in, it should be decentralized, which means that everybody has a copy of, distributed. Yes, exactly. But in some cases like XRP, for instance, or the token that BDL wants to create, okay, it will be centralized. but it's still a ledger. Nobody can say no, right? And then you have a consensus system. What's the consensus system? So the ledger tracks transactions, okay? One thing I need to rewind to. The reason I highlighted Ethereum, because we were saying Bitcoin is a transaction, Bitcoin and its likes are transactional blockchains, okay, with utility. Their primary utility is transactional, which means exchange of value, peer-to-peer, without any middleman. Now, what did Ethereum bring to the table with that 14 million? They brought the first decentralized and distributed compute platform, which means when you run something on Ethereum, anybody that's participating in the Ethereum network, you are running your app, which is called a decentralized app, okay? You run it all around the world. So ISP cut, who cares? Because it's virtual, it's in the ether, and that's why they picked the name Ethereum, okay? So every blockchain has very simple things that are required. A ledger, and consensus system. What's a consensus system? It's the means. I don't want to get too, there are consensus systems that you will hear. Proof of work, proof of stake, miners, stakers, delayed proof of work. Okay, we use ASICs, we use GPUs. Okay, proof of time, proof of authority, proof of ownership, whatever it is. Proof of weight, okay? It's basically some mathematical logic that's distilled into algorithms and hard-coded into the code, okay? Where when the network starts, it cannot change without the majority agreeing for it to change, okay? And what's the reason for that consensus? Simply because it's a distributed ledger, so everybody has to agree, have to have common means of agreeing on the consistency of that ledger. Done? No. We're talking about the underlying, we're still talking about the pipelines, the plumbing of the network. Your address, a database اللي هي distributed اللي هي carries the transactions. Okay? اللي هي فيها انه I sent you, okay, me, to the network, to most of the cryptocurrencies, I don't exist me as Al, and you don't exist in your existence. You exist as a pair of a private and a public key that are made available for that transaction, and then you cannot use them. If you don't want to use them anymore, that's it. Okay, so you need to broadcast it to the network. Okay. No worries. So basically, when you do if we are doing a transaction, when we do the transaction, it will be broadcasted, right? And then, if the consistency, if 51% of the network or more, actually it works a lot of time dependent on fee queuing, or fee memory pools, or a lot of small parameters. But when it's accepted and it receives the first confirmation from the network, which means that everybody around me voted yes, it happened. That's it, it happened. And confirmations keep on counting. Okay, they don't stop. So if we are at block 3 million right now, and I did a transaction to you, it's broadcasted and it has the mathematical magic to confirm its validity. Why? Because every transaction has to be signed by a private key that's not shared except, it's not available except in my possession, okay? And your transaction, when you send something out, the same. It's signed with your own private key, which is only available in your wallet, in your digital wallet, okay? So that's proof. That's proof. And after it's done and it's included and it's confirmed, it's immutable. So the consensus requires participation, okay? And the consensus is one way or the other is actually incentive. Why? This is what the mining is. People mine. Yeah, okay, I'll jump through them. people mine. So basically, they're reaching consensus that this block in its form and the data that it should contain is valid and acceptable by the majority. So here you go. Thank you very much for your work. Okay, the network pays you. Plus, the miners also get transaction fees. The transaction fees are not controlled by anyone. It's controlled by also mathematical algorithms on the network that determine the value of every transaction based on fee. Is there congestion? Is it too slow? Is it too many inputs, too many outputs? But again, it's all embedded in the network. So this is the base utility. But there are additional utilities, okay? How are they created? They're created by special nodes, and they're created by special nodes. What are the special nodes? Special nodes basically are nodes that do the basic functionality, but you can put a collateral in them, which means freeze an amount of that currency in it, and then it will serve an additional function on top of it and gives you incentives as an operator. Think of it like a savings account or a fixed deposit account that's in your control, which means that I can start it now, run it for 5 hours, and then break the collateral, and I won't be charged anything, okay? What do these do? These empower additional services like decentralized organizations, voting, which is another layer of consensus, okay? Voting on projects, voting on budgets, in addition to, in some cases, service nodes, okay, that allow the network to connect to other networks, allow the networks to run decentralized exchanges, all these are incentivized. So bottom line is, in the blockchain technology, decentralization instates security. Why? Because the more dispersed and big the network is, the harder it is to affect it, right?
How safe is that first? How safe and how private it is?
Okay. Some of the special nodes, usually, or actually when they started as private send nodes. What they do this mixing and tumbling of coins and, fractioning stuff, all automated, and send it in order to protect the anonymity of the transmitter, okay? So how private? It can be as private as you want, specifically that the spectrum of blockchains that do such...
Kind of committee, 51%.
No, there is no committee. It's all mathematical. They're not people.
These 51%.
They're not people. No,
They're
they're not people.
Who are they?
Computers working on their own.
Correct.
Yes.
If they have to approve or reject any newly introduction of anything, let's say,
Yeah.
how would you know that it's really private?
No, you would know. Okay, because it's in the code, it's in the algorithm. Okay, so no. Yes, so decentralization instates security. Incentives fuel participation. Why would you want to run a computer at home to support a network? Okay, the only reason you would want to do that is if you're getting something out of it. So incentives fuel participation. Utility drives adoption. Again, why would you partake or buy a coin that has no value? No value of use. Okay, be it a utility coin, utility token, whatever it is. It has to have some sort of use. And at the moment, the most usable coin is Bitcoin. Okay? But a lot more is emerging. Distribution, on the other hand, mitigates volatility, which means that when the coin distribution is wide, okay, how would it be volatile? If each one of us has a small fraction of it, there is no concentration of wealth from this token, okay, who would dump the price? Right? How would it happen? Because, everybody has a small fraction of its value, okay? No, there are ways, definitely, yeah. With Bitcoin, no, fee concentration. Yeah. Sure.
Let us finish and start open the floor.
Sure.
Okay. The floor, but please,
After my
we
final
want
statement?
to, yes.
Okay. خلاص, this is it.
Okay.
Okay. Point of the matter is, please, I beg of you, okay, do not undercut this emerging technology with the least significant part of its value, money. Okay? Because it is the future, okay? In ways, shapes, and forms that we don't fathom yet. Okay? They're still in the making. So its monetary value in comparison to fiat, okay, is the least significant essence of this technology. Okay? Thank you.
Thank you. Thank you. We still have like 20 minutes for. We still have like 20 minutes for the question, but I would like you to ask and to choose the speakers you want them to answer you, please.
He was asking a question.
It's okay if you want. Basically, it's for all the panelists. Just on the last comment, how can something be so valuable in Bitcoin and so usable where my wealth in Bitcoin is dependent on someone's mood of just selling everything now and just crashing the price? And if I want to invest my money, I'm not talking about investment, but if I want to use something that is so volatile, that is not fractioned, and it's going to be changing my life day-to-day basis, how can something be like, how can this decision be smart for me?
Money doesn't change your life, man. Okay? It makes it better, yes, but it's a tool. Okay? Don't be its slave.
It's a matter of perspective.
Yeah,
this is
100%.
my perspective.
This is why, for instance, part of my slides were related to trading. If you're into it and you are not like Zaki, for instance, Zaki is dedicated day by day, tracking what he wants to work on, picked his niche market, and he has the experience because this is a full-time job. So what I recommend to do is build a portfolio, okay? Balance it and keep on balancing it, and don't include in it any amount that you can't afford to lose. But meanwhile, where do you work?
City.
In a bank?
City, yeah.
Okay. Meanwhile, the most important thing for you right now at your age, okay, is to think of the next big thing that you want to employ blockchain technology to create it. Do you get me? At that point, okay, you might end up being the next Zuckerberg. So what Bitcoin price is right now, okay, is insignificant to you. فهمت علي كيف؟
But you can also enslave to Bitcoin once you have your money in.
Do not
No.
put your money in Bitcoin. Okay, so that's very clear.
Mahed, this is
No.
no, at the beginning of the question, I specifically said I'm not investing in cryptocurrencies. But what I'm saying is, if we're actually discussing cryptocurrencies as a means of replacing fiat currencies, وهال bulk of cryptocurrencies are with majority of people ساعات اللي بدهم فيهم to dump things.
Yeah.
We're playing with economies here.
No, 100%. Yeah, but
I have one question. The lady said.
It's not.
The lady in the front said if it
Wait-
is
wait
it
a
is
minute.
hacked.
Hearing neither the.
Okay. Are you hearing me?
Yeah, please.
Okay. The lady at the front said that if it was hacked, and the answer was we cannot hack the blockchain. It's distributed. We can hack the wallet, which is right. However, the blockchain is controlled by 51% of the miners community. Let's say roughly. Yes.
no, yes. But it depends which chain
And
you're talking about.
and the question that you asked was very pertinent in the sense that there is a concentration of miners today in China, in Georgia, that might represent 51% of the community.
Yeah.
There are very big number of them in these two countries. So today, if there is, I don't know, a conspiracy, let's say, okay, which can happen, right?
Yeah.
Okay, because they are not more than 5,000 maybe minor, I think, in the community, which is not a lot, distributed, but not a lot. So they want to be distributed, not centralized, but still the distribution is very little. So if they fork it, يعني they decide 51% to change the code. Okay, which they did.
It happened many times and many
with the
of them.
Litecoin.
Yeah, no,
right?
even Bitcoin.
And with the Ethereum as well, which
even Bitcoin,
destroyed the credibility of the currency.
100%.
Okay, so what would happen with $71 billion that is evaluating the Bitcoin, only half of it now?
Just like what happened when the first few forks of Bitcoin happened, and Bitcoin wasn't above 1,000. Whoever owned Bitcoin and Bitcoin forked owned an equivalent amount on the fork. This is the consensus of things. Okay, and then they do with it whatever they want to do. You want to buy it, you want to sell it, you want to trade it, it's up to you.
What I like is what you just said. Let's think about the future of it.
This is why we need to zoom out
the
from
Bitcoin today is like, the phone, the GSM
Motorola
phone 20 years ago, which was 1 kilo heavy. Now you have your office in your phone.
100%.
Okay, I do believe that the next generation would be what Zaki said is, what a stable coin, which is backed by asset.
Stable coins.
However, there's a problem of liquidity. If you have your land, you want to tokenize, who's gonna buy your land in Bekaa or whatever? Okay, but you're right, and I think we are approaching this. Okay.
I just want to clarify what I said. I do not believe that ownership tokens are going to replace Bitcoins. Tokens, as I explained, there are different kinds of tokens. One of them is a payment token, which is a cryptocurrency. And I don't believe that these are not either this will survive or that will survive. These are two completely different things. I'm very bullish on STO. I'm very bullish on security token offering as a means to raise capital. But I do not believe that those are actually going to replace Bitcoin, which are payment tokens. Sorry. No,
theoretically, yes. Theoretically, it's backed by something.
Dollar is.
No, they print whatever they want. Yeah.
Yeah. Correct.
Yeah, but correct. Here, yes, but in.
Correct.
Yeah.
Correct.
They're not forking it because they're not. Yeah, but they're not forking it because it's still the dollar. So what I'm saying is, when BTC was forked, they had Bitcoin Cash.
I did a study on that. Yeah. The dollar is devaluating every day, but all the other currency are doing the same to keep the trade balance between the countries the same. So all the currency are devaluating at the same time.
100%.
But it's forked every day. So today what you can buy with $1, you cannot buy it in 10 years with $1.
What did you use to be able to buy Bilira, Hon? It's the same thing. So for us also, we need to...
So Bitcoin is like dollar today. The day you will trade the oil in Bitcoins, it will be a standard in the world. It is, madam.
We need to stop.
Please
we need to
don't
stop
talk at the same time. Please.
We need to stop.
It's not discussion.
Building parallels at some levels, attempting to bend what's real right now in front of us, how we do things, okay, to what's coming. This blockchain ecosystem requires the lawyers, the bankers, the traders, the governments to be futurists, okay? Not people that are very sure about what they're doing right now, because all the rules from, all banks have compliance officers. Compliance officers will become redundant pretty soon, if
But the question is, if I ask for all the panelists, in the future, how would you see a virtual world with nothing tangible at all, knowing that the human being is himself tangible?
Yeah.
No.
Sweden right now.
Let me please let Zaki has an answer, please.
You got my answer, my query.
I'm gonna answer that, but I just want to raise the concern. The Bitcoin has nothing to do with the US dollar. The Bitcoin has a it's not at all similar, because Bitcoin is scarce. Bitcoin has a very clear supply mechanism, which okay, I'm not sure how familiar you are, but
There is a cap for it. You can.
there's a cap, and there's not only a cap. There's a way how Bitcoin
Is
grows
generated,
and
yeah.
is generated, which is unlike the U.S. dollar. The U.S. dollar is simply generated whenever the Feds prints money, and they just increase the money supply. So, that's what I'll explain to. Sorry, I'll explain. When it reaches, it's about consensus, and this is what you need to understand. If everybody decides that okay, we want to increase it, so the value of our bitcoins are going to go down. بس ما هو أنت you are part of this you are part of this network. The decision. But let me explain. The decision of increasing the money supply of the US dollar is not made by every single person who owns US dollars. The decision to increase the money supply of Bitcoin is actually made by all those who own Bitcoin together as a consensus. I would like, I know that 51%, sorry, not we're going to discuss the the community.
Yeah.
Of course, we are just part of this community.
Point-
I'm gonna, and
Yeah.
we'll talk afterwards.
Point of the
Sorry,
matter.
بس,
It's okay. You had your please. I will re-ask mine.
What would happen if someone crashed your database or the bank's database?
The question is investing in a virtual world in a way like
Yeah.
bitcoins
Yeah.
or something else in the like
Crypto assets.
Crypto assets. How would you see it in like working on that from now? How would you see a virtual world where there might not be or there might be or there have to be a tangible also world in parallel? Because the human being himself is tangible.
we're not saying that when we say that we're going to invest in STOs. I'll just say something. When I was explaining that security tokens will be commonly used, I'm not saying that the underlying asset will disappear. Yes, you're right. These are tangible assets, and we want to use them. We're going to look at them and use them and everything. It's just about how they are represented. Instead of going to the notary public and getting the transaction done, it's done virtually. The transaction, the ownership is transferred digitally, but the actual asset is still there. You actually own the asset. يا ريت بقدر بس كنت خبركم قصة ياب ايلاند. I will do that later on بس إذا كان معي وقت later on. لحالي
فيك تخلصها بفورية.
لا بس إذا كان
معلش
I
طبعاً.
have 3 questions for everyone of you.
مش حطوا له الطريقة
بس بليز سؤال
First question for who decides the number of tokens, like how much they should generate?
That is predetermined upon launching the Genesis block, which means that from the minute of inception, okay, there are parameters in the code that say top supply is 21 million. It gets halved start with 50 every block, and then the block target is like 10 minutes, okay, and it halves every 4 years.
هيدي بيتكوين
As an example.
So
if I create my own token,
انت اذا بدك تعمل هلا algorithm you decide whatever
you
you
decide.
want.
هي يصير
لا انت في دبلتك يو توكن هلا حدا حيشتريها او لا اتس
يصيروا كوميونيتيز كل وحده
Exactly, 100%.
عندها الكرنسي
100%.
كوميونيتي كل وحده هي بتتحكم فيها. السؤال هو انه الماني سبلاي سوري بس how do you evaluate ICOs? Well, since you have been trained.
Technically, don't invest in this.
Sorry to interrupt. ICOs, okay. If anybody comes to you and tells you, no matter how fancy he is, with all these, promotional material and promises of the future.
Let me comment on something. One of the ICOs I participated in, do you know who was the CEO? One of the big guys in the World Bank. Actually, he was pretending to be one of the big guys in the World Bank. And the funny thing, if you can check his LinkedIn, it's real. And he has around 1,000 endorsements and so on.
So point of the matter is, what's an ICO? it's basically comparable to a startup or something like that. Somebody wants to round up money in order for him to be able to create something new, right? So if somebody comes and tells you, I want to do an ICO to create, I want 5 million USD, okay, to create a new social media app. شو يعني? Is that a smart investment? No. If somebody comes and tells you, I want $1 million to create a delivery app or an Uber-like app, is that an investment? No. Plus, if there is an ICO that the idea is something you like, but you're not so sure, and you can never be sure with ICOs, and you want to get in, no problem. Keep on monitoring it. Because usually the smart people get into ICOs on the first dump. When does the first dump happens? When people buy the ICO coins in the ICO pre-sale, round 1, round 2, all this bullshit, excuse my French. And then the minute it's listed on an exchange, they want to liquidate some to get some of their money back. So you will buy it, مثل ما بيقولوا, $1 for a dime. Then if it's worth something, yeah, you got in cheap.
And also third question, بالنسبة للcryptocurrency بلبنان, how about legal and legal stuff?
Okay, بسرعة, the central bank doesn't have the authority to tell a company not to. أنا إذا بدي منك مصاري وأنت عندك خشب وفيني أقول لك أوكي بتعطيني الخشبات و I will cancel هاللون اللي عندك إياه. السنترال بانك ما له حق يقول لك لا ممنوع تقبض خشب. له حق يقول لك ممنوع تقبض هيروين illegal things which are basically it's a Ministry of Interior thing. It's not a
100%.
It's not a central bank authority to that's an illegal thing. بس وبعدين بتصير المشكل اللي هو بالكريبتوكرنسي هو the reliance of the auditor. How is the auditor going to value this asset اللي هو على البالانس شيت تبعيتها which has nothing to do with the central bank صارت MOF. So احترامي للسنترال بانك حاكم مصر لبنان مستر سلامي انه بيطلع بيقول نحن منعنا بيتكوين. It's just a statement يعني هو ما كثير. So I have a lot of reservations.
I think one more question, and if anybody, please, we've created
Please,
this
one
email.
more question
Okay,
here.
boyle@cryptofy.com. If anybody has any question, requires additional information, wants to brainstorm, okay, please
The
feel
last
free
question,
to use it.
please. The last.
By the way, we're giving away free credit cards.
This is the email that we created for this event, so we will know. Mine is al@cryptofy.com. al@cryptofy.com.